This should be quite interesting and educational, I think. So the floor is yours.
Thank you very much. Thanks a lot. Good morning, everyone. So we're going to talk about something different, meaning something that is linked to food versus metals, and this is potash. So a little bit about our strategy, how we approach these projects. This is not our first potash project. You will see our track record momentarily, but we look for projects that are previously explored. We'd never take early stage minor risk, so to speak, or discover risk in a jurisdiction that is very favorable, meaning they're open to a foreign direct investment, they're open to different countries, and it's easier, relatively easier to get permits in place. And of course, we do quite a bit of work on commodities itself. We want to make sure that supply-demand dynamic of that particular commodity that we're getting involved with is actually pretty robust for the next 3 to 5 years. So this project that we're going to talk about is a potash project in Gabon in West Africa. Just a little bit about our team again. This is our third potash project. The previous two, one was in Saskatchewan in Canada, the other one was in Ethiopia in East Africa. We sold the Saskatchewan one to a German company called Kalun Salz. I'm sure some of you guys have heard of K+S. They actually, after they bought us out, they built that project. They currently produce about 2 million tons of potash using solution mining. We had Alana Potash in Ethiopia. We sold that one to a company out of Israel called Israel Chemicals, also a large potash producer. The most recent success story was in the lithium space, also called Millennial, but Millennial Lithium, and that was a brine project in Argentina. We took it from very early stage all the way to the completion of feasibility, and then we had a bidding war. We ended up selling the company to a company called Lithium Americas, which was dual listed, or is still dual listed on TSX and NYC. So with this project, we started in early 2023. Since then, we've drilled a couple of holes, which covers only about 2% of the project property. I mean, we're talking about 5%, but it's actually about 2% of the entire property. It's a very large property. I'll go through the details later on. We already have 1.7 billion tons of indicated and inferred resource. But what is important about this project is not just the large size of the resource, but also the thickness of the deposit, 70 meters. Again, to put that in context, this is one of the thickest deposits in the world. And this 70 meters is actually at the thinnest part of the project. Again, I'll give you more details later on. We did the preliminary economic assessment early this year. This was based on 800,000 ton a year operation. Again, one of the best numbers there in terms of after-tax NPV and IRR. Again, to put that in context, in potash business, if you get to above 20% IRR after tax, you're very lucky. This is over 30%. And we have one of the lowest operating cost estimates as well. Again, you will see the comparable table later on in the presentation. Briefly about the team. It's very rare in this business to be together for a very long time, but our mining management team has been together for almost 17 years. All these projects that I showed you earlier, we've done all that together. So we see eye to eye on many things. Just a few guys here just to show the real strong potash orientation of this team. Rick LaCroix, for example, our director, used to be Senior Vice President of Potash Corp, which is Nutrien today, the largest potash producer in the world out of Canada. Mark Stouffer used to be the president of Potash and Phosphate Institute of Canada, again, one of the largest organizations in the industry as well. So a few words about Gabon. I don't think you guys know much about Gabon. Neither did I before I came across this project. I knew, of course, where it was. I knew that it was an oil and gas producer, but not much more than that. So Gabon is a relatively small country in West Africa, about 2 million people. It is the wealthiest country on GDP per capita basis, primarily because of oil and gas revenues. In the last few years, they've decided to diversify away from oil and gas and open up their mining industry, and that's why you see some large operators there already. Eramet out of France has a large manganese production center. Fortescue has a very large iron ore project, and so forth. So when we came there, they welcomed us with open arms as well. An interesting thing about Gabon is that although it's a francophone country, as you probably know, they decided to join the British Commonwealth a couple of years ago. Again, this was kind of an effort on their part to diversify politically as well. And one other thing I should note here is that it's one of the most neutral countries in this part of the world, meaning that they're open to business with Asia, with Canada, US, with Europeans, with Indians, and so forth, which was very important for us as well. Now, let me tell you a little bit about this project. So, as I mentioned earlier, we never get into projects that were not explored in the past. So we had quite a bit of data on this project, and we liked it. It was originally explored in the 1970s. It was oil and gas company out of France, obviously looking for oil and gas, but instead of striking oil, they intersected a lot of potash. Then fast forward to 2017, 2018, and this area, 20 kilometers northwest, an Australian junior came in and they actually sank 3 holes looking specifically for potash, and they did intersect very healthy potash horizons. And we had access to all those drill cores as well as the data from the 1970s. And on top of it, we also had all the seismic data. So we knew that there was a lot of potash. We liked this, and that's why we took this on. And we drilled only two holes. Basically, we extended the existing historical holes. That was the easiest thing to do right away on a small budget. And we basically confirmed 1.7 billion tons. Again, very thick potash horizons. This is 70 meter thick at the thinnest part, meaning in the northern part of the project. But according to the seismic data and historical drill data that we have, as we move to the south, towards the border with the Republic of Congo, actually the thickness goes up to about 150, 160 meters. So we think this is going to be one of the thickest potash deposits in the world, which actually translates into much lower economics, much lower cost economics, I should say, much more viable economics. So we engaged Micon and Agapito Associates. These are well-known potash consultants. They've been around for many years. And the reason we engaged these guys specifically is that, A, they know solution mining very well. I'll talk about solution mining technology in a bit. And of course, this part of Africa, this specific potash basin in Africa. And this preliminary economic assessment is based on 800,000 ton a year operation, which is, I would say, probably not very large scale operation, but it's good enough to show the economics of the project. And we came up with really strong numbers. As you can see there, $480 million capex, $61 of operating costs per ton, and very, very strong post-tax NPV and IRR numbers. Now, let me show you how we compare to others. So, and I'll talk about the potash industry in a little bit, just to show you who controls the market, who the big players are, and so forth. But if you look on the right side of this slide, you will see the OPEX comparison. So MLP has $66 per ton. That is $61 OPEX plus $5 to the port. Port is only 50 kilometers away. The next 3 are the largest producers of potash in the world. So Uralkali out of Russia, Nutrien out of Canada, and Belaruskali, as the name implies, out of Belarus. As you can see, we're lower than them. Once this PEA came out, we already got quite a bit of interest from strategics. We signed 3 NDAs with large fertilizer producers. And I think this is what really attracted their attention. They drew their attention primarily because we know how these guys think. They look at our numbers. They never take our numbers at face value. They immediately add 30, 40, sometimes 50% on top of those numbers. But even if you add 50% to our OPEX number, we're still gonna be probably lower than some of the current lowest cost producers. And that's what really, I think, is important in potash business, because you have to be at the lowest end of it. Otherwise, it's very difficult to either attract potential acquisition or attract financing to get to production. Now, if you look at the capex side here, obviously we're not comparing ourselves to producers, we're comparing ourselves to the development companies, because remember, most of the producers went into the production, you know, in the 50s, 40s, 60s. Some of them have been in potash production for 100 years. So very difficult to compare, of course, the apples to apples in terms of capex. But here, these companies, we kind of give you pretty good selection. Highfield is in Spain, Core is in our neighboring country, Republic of Congo, Western and Gensors are in Saskatchewan, and Brazil Potash, of course, in Brazil. So capex intensity, basically we're taking total capex and divide it by our planned production scale. So in our case, we took 480 million and divided by 800,000 tons. So here's an interesting thing. The Brazil Potash, I'll give you that example as a two extremes, so to speak. Brazil Potash is planning 2 million ton a year operation, so much larger scale than what we're planning. So you would think that they would benefit from the economies of scale at 2 million tons. But even with that, their capex intensity almost twice as ours. So if we shoot for 2 million ton a year operation, this is going to come further down. So this is how strong this project is, frankly, better than what we expected initially when we started with this project. Solution mining, in a nutshell, it's very similar to probably some of you who know uranium in situ leach, but even more environmentally friendly, because all you do is drill into your ore body, you pump saline solution or salt water into your potash deposit, you dissolve potash underground, you pump the brine back up to the surface, and then you go through your processing. The reason we like it is twofold. A, it keeps your capex low. You don't excavate, you don't move earth, you don't sink a shaft. B, very important as well, environmental impact is minimal, as you can see, as you can imagine. And we know this methodology quite well because the previous two potash projects that I mentioned earlier were both amenable to solution mining. Just a few pictures to show you what it looks like on our site there. This is a drill core that came out now. Some of you potash lovers, when you see red core, that is very good. Even visually, you can tell that there's a lot of potash. And then I will just go here. Here you go. Okay, so what's happening in the potash world? I'm sure you don't go to bed thinking about potash, so I'll give you a little bit of an insight of what's happening in this exciting world of fertilizers. So the three countries that control the market, basically, 70% of potash supply comes from Canada, Russia, and Belarus. There's a bit of production coming out of the Middle East, just tiny bit out of US and Spain, Chile, Laos, and China itself. Now, the largest users, as you can imagine, obviously are largest agricultural countries in the world. So the biggest importer is Brazil, 13 million tons a year, followed by the US and China, about 10 million tons each. India is quite a large user as well, about 4 to 5 million tons a year. Africa as a continent imports about 2 million tons a year. They have no domestic production, so obviously everything comes from outside. Now, before I tell you about our advantages, let me tell you about pricing of potash as well, because it's really region dependent. So at the lowest end, we have, again, those biggest markets. So China, India, Brazil today would be paying between $290 and $300 per ton. Now, eastern seaboard of the US and Western Europe would be paying between $300 to up to about $350, or sometimes 350 euros per ton. Now, Africa, because the African countries buy on smaller batches, they actually pay much higher price. So they pay above $400 per ton. So that is just to give you where the pricing spectrum is. Now, we are in Western Africa. Obviously, we will be focusing on Africa first. So we will be trying to place as much of our product as possible in Africa because A, it fetches a high price. B, it's going to be closer. Obviously, shipping costs will be lower and so forth. And C, which is not very obvious, but once we position this as African potash for African agriculture, we also get a lot of support from what they call multilateral financing organizations, such as International Finance Corporation out of Washington, D.C., African Development Bank, a whole bunch of them out of Western Europe, of course, EDC out of Canada, and so forth. We have very good experience with these groups because with Alana Potash in Ethiopia, IFC out of Washington, D.C. was a large investor in Alana Potash. And later on, when the time was to build the project, they brought in almost $600 million worth of debt package too. So we have a huge advantage here. Placing in Africa, as you can see, the red arrows also show we're going to be the nearest supplier to Brazil, the largest importing nation on earth. And then we'll be closer to India and China than most of the potash producers based in the northern hemisphere. And it will be equidistant to eastern seaboard of the U.S. if you compare us, let's say, to the Russians, Belarusians, or even Germans. So the plan going forward, we've done everything that we've set out to do last year, including early this year. So the next few steps for us will be to drill 2 more holes to expand our resource further. So we want to take it from 1.7 billion tons to up to about 3.5 to 4 billion tons. And then we will start with both bankable feasibility or definitive feasibility study and environmental assessment works as well. So the plan is to launch those 2 programs probably later this year, early next year after drill program, and then complete them by the end of 2025, early 2026, by which time we'll be in a position to apply for a mining permit. We are listed on the TSXV, so that you can see the ticker is MLP. Obviously, we trade all over the counter in Frankfurt and in the States. The management, the board, was still on about 30%, and you can see what's going on. Well, the cash, they missed the cash, so we got about $2 million in the bank. We just did the raise. So it's enough for us to proceed on the drill campaign, but obviously we'll need to raise more capital later on for BFS and EIA works. So just again to finish up here is, again, it's a very strong project already. We've already progressed this through exploration program, very large resource, very thick potash. The team that has delivered in the past and knows potash very well, and most importantly, again, in the right jurisdiction and the right location within Gabon as well. I didn't talk much about it, but maybe the last note is that the government is extremely supportive of the project. We had the government change in October last year. Since then, I met with the president of Gabon, very supportive, and about a month ago, he also visited the site himself. So we see quite a bit of support coming from both the president, from ministerial level, as well as the local community. So I'll stop there. Thank you very much.
Thank you. So Farhad, I will start with the first question here, and that is connected to well, more or less the history of the team that's been together here for 17 years. Shall we assume that the end game would be that you will sell the assets, or you will develop it and then sell the assets?
Yeah, look, I mean, that's a very good question. We've had both situations where we've advanced the project all the way to post-feasibility with secured mining permit, and we sold the project. But in the case of the uranium project, we had Energy Metals, we actually built the project. We had multiple projects throughout North America, but the one in Texas was actually built and we started operations. We still got bought out. So the way we approach these projects is what we call dual track development. So on one track, we want to make sure that we show a very large resource, strong economics, attract potential acquisitor. On the other track, we want to make sure that if push comes to shove, we can actually fund it and take it all the way to production. In our case, at least, we've learned the lesson that they go hand in hand. If we don't have the second track, it's very difficult to command much better premium on the first track. So to give you a very specific example, with Atlanta Potash, ICL, the Israeli company, didn't come and buy us right away. They were actually already a strategic investor. They owned about 20% of the company. And they had a board seat, etc. And when they came to buy the remaining 80%, they knew that I was already working on funding to get it all the way to production because they were on the board. So they knew that I wasn't bluffing. So thanks to that, despite the fact that they had kind of a stranglehold on us, but they knew that we could always pull the trigger on financing, they ended up paying us 50% premium. So I think it's important to develop on those both tracks. So long winding answer to the fact that here we'll do the exact same thing.
Yeah, the answer is yes.
Yes.
And am I right in understanding that in 25, 26 you will be able to produce, or?
No. By the end of 25 or early 26, we'll finish those 2 programs that I mentioned, the bankable feasibility and environmental studies. And at that point, we'll be able to apply for mining permit, because you can't obviously apply for mining permit without environmental study completed. And to get to production, it will, of course, be a function of funding, etc. So realistically, we will not be able to start construction probably until the middle of 2026. And that will take probably another 12 months to get to production. So if everything goes according to plan, we'll be in production only in mid-2027.
And you referred to lowest cost producer, and if I understood it correctly, it's because of drilling and then the technique of pumping water rather than moving a large chunks of earth, as I assume they do in Belarus. Is there any other components here that that's working to your advantage of being a low-cost producer.
Yeah. So no, you're absolutely right. One of the main factors is the solution mining technology, because if you look at major producers right now, let's say Nutrien in Canada or Uralkali in Russia or Belaruskali that you mentioned, all of these are what I call legacy mines. They were all built underground. So today, for example, BHP is building a massive Jansen project in Saskatchewan. They're spending billions and billions of dollars. Already, I think they spend like 10 billion. They're going to spend even more. It's an underground operation. So solution mining, by nature, obviously, is much less, in terms of capex. But also, we have what I mentioned, a very thick potash horizon. So what happens in solution mining when you pump your water into your ore body, you create these big caverns. So the bigger the cavern, the lower your cost, because that means that you can literally have only 10 caverns operating for 10, 15 years without any need to replenish them. To give you a contrast, in Ethiopia, our thickness of potash was about 5 meters. So we had to maintain 100 caverns all the time and replenish them every other year. Here, we can literally have a few caverns because they're very thick and operate for a very long time. So it brings your capex down. It brings your sustaining capex down as well. So those are two factors. We have another additional factor here is the fact that we're actually right on the coast. So instead of using fresh water, we can also use salt water. And none of the groups operating right now in Canada or Russia or Belarus have that ability, because they're smack in the middle of continents.
So as they say in real estate, location.
Yes,
location.
Absolutely, yes.
Could we, I would just finish here with a balance sheet question here. So so we have a timeline, 25, 26, and then we may be in production 27, 28. Are you happy with the structure of the balance sheet as it is now? I'm looking at the funding here.
Yeah, so look, we've kept our share structure pretty tight, but we'll need to raise more capital. So so far it's basically it's ourselves and also a few funds, mostly out of Europe and out of Canada. The plan is to bring one of the strategics in the next few months. We already have some large fertilizer producers interested in the project, but we're also talking to, and I mentioned, the multilateral financing institutions. These are basically Western organizations that they have a mandate to develop certain industries in the developing world. So we have very good relations with them, very good experience with them. So we want to bring one of those organizations in as well as an investor. In addition to that, we're also talking to off-takers. So basically fertilizer distributors. So we think the bulk of capital in the next few months will come from one or two of these groups. Okay. And that will basically make it possible for us to finish all these two programs. Right now we have enough to do drill program, but we do not have enough capital to do both bankable feasibility and environmental studies. Yeah. Excellent. Interesting. Should be very interesting to follow. Thank you so much. Thank you very much. Thanks a lot. Thank you.